Hey folks, LA Little here with TA Today, and we're at the end of the year, 12/27, so we're looking at a couple more days trading and the year is over. And with that, there's not a lot happening as a result. We've had a great year ourselves here at TA Today, pushing 40+% returns on the year. But I want to talk about uranium again because uranium is still a difficult trade, has been all year long. Continues to be. Here's those gains we're talking about. 40.91, made about, I don't know, looks like about 30 trades or so during the year, have about 3 or 4 on. And you can make money in this market. You don't have to trade day trades. These are mostly swing trades. If you figure a swing trade is going to last 3-6 weeks, and you got 4 or 5 on at a time, you're going to have about that many trades. So that's about what you would expect. This all comes as a result of the neoclassical trend trading that I do, which was described in these 2 books published by John Wiley, and also using the ABCD structures, which I've developed since then, and have a new book coming out which will be published here in the next few weeks probably. With that, let's take a look at the uranium market. Okay. Let's pop into, first let's go to the metal itself. Here's the Uranium Trust Fund spot, this spot. And boy, what a mess this thing has been. Let's dissect this thing. We'll just start, actually let's start, it's actually better usually if you start at the end and work your way back, and we'll start at the monthly. So the monthly still bullish, right? Here's your retest regen way down here. Still 10% away from that, 10 plus, about 12%. Has been kind of declining here. Now I don't draw trend lines, but a lot of folks will draw these in. They don't really mean anything to me, so if it trades up to here, that doesn't mean anything unless it does something significant. Trend lines don't mean anything really. But if you're going to look at this market, you can see it has been trading lower. In other words, the direction has been in this area, right? Was up higher, got a big spike, and now it's fading back in. That just says it's it's normal. Nothing wrong with that. Matter of fact, this thing would have to trade, in my book, would have to trade down here to kill the bull run. That's a long way down, and so still I don't think that's going to happen, but that's possible. If we move over to the weekly, swing point low here, got a trend change here on this arrow, has been working its way back and forth, has been unable to do anything of significance. Now, when it broke over right here, when it broke over this swing point high, a retest regen of that swing point high makes sense. What is the retest regen? Well, the retest regen is when you go back and you retest the bar that you broke out from. And this is that bar. That's the high and the low. The fact that it's still holding, it held here, went back up, came back, it's holding again. This tells you that so far, nothing is abnormal. Now I know that's hard to believe, but nothing is abnormal. In other words, this sideways trend is still doing what it's supposed to do, and that is it's pushing prices to the sideways direction, right? It doesn't have to be, directly sideways. It can go up, it can go down, it can go up and go down, right? And that's what it's doing. That's what sideways does usually. It gyrates around some sort of an area. Just so happens that area is this bullish retest regen. And so far, nothing of significance has happened. Now, if it breaks below this, well, then that's going to be significant. And that could happen, and we just have to be aware of it. And you have to decide what you're going to do about it if it does in fact happen. Moving over to the daily, a little bit different of a story. You've got breaks to the downside, right? Broke a swing point low here, broke another one there, this one, and you're bearish as a result of that last breakdown here. And so that just says that this market is struggling, has been struggling, still is struggling. So short term, trend is down. Medium term, trend is sideways. Long term, trend is up. If we look over here, what does it say? Bearish short term, sideways, bullish. That's exactly what I just showed you on charts. That all looks normal, right? It's not great, it's not doing what we want, but if I take the long-term view, right, this is just a consolidation fading down lower, right, which should eventually work its way to the top side. We're going to know that when this one actually does it. So in other words, when we get the next pop up and we get over this, we're going to have a much lower, smaller retest regen area if that's what happens. If it holds it, so in other words, imagine this coming up, gets over it, comes back and tests it, and then goes on, going back towards the highs again, right? This picture over here will look a lot different. Okay, let's move to some of the stocks. We'll take the big one first, Cameco. Cameco doing a retest regen itself. The low there is 52.67. The low here is 52.44. What does that do? That breaks it. That says that this thing's probably sideways. And so, the fact that you couldn't hold that tells you that this thing's probably sideways. Sideways where? From the top to wherever its next significant point, and it looks to me like it could be as low as, well, usually when you break a swing point high, you're going to go after the low. That's the low there. These are the three big bars here, so I would think this is about as low as it can get. So anywhere from 61 or whatever it was up to about 45 or down to 45. That's Cameco. Long term looks great. If you look at it over here, bullish still. Hasn't broken that swing point low, so still bullish, and then sideways over here. Let's go to the next one. So Cameco is not in bad shape, just needs a rest. I'll go to NXE, which is next gen, and if we look at it, next gen, well, look at the long term first. Bullish retest regen here. This is the bullish retest regen area. Now it's coming back into it second time. If it gets in there, right, the odds are better that it could actually break to the downside, but still, this is a good looking chart still. I mean, it's the only thing I'd say about these things is they're extended, right? This is extended. CCJ was extended on the long term, but the long terms can stay extended for a long time. And so, I wouldn't jump to conclusions there. Usually these give you much better reads when they get extended, when they get up into the 70-80% range. As far as the weekly here, you had a nice big volume build up here, goes up, test that high. I actually didn't quite test it, but almost to it. 8.88 got to 8.96. So it actually tested a high with more volume, which says it should test again, which it actually did the next bar, a lot less volume, and then that led to the downtrend. So is this bad? Well, yeah, it's not great, but still, I mean, you didn't break this, so the test is down here on this swing point high, and this is that retest regen that's taking place right now. If it breaks below it, that says this has turned into a sideways trend. Officially it is in one already, but that would say that it's going to continue to be a sideways trend. And over here looks pretty bad, of course. Let's go to the next one. I'll take UEC next. I'm trying to do the larger ones. Here you actually got, well, let's go to the monthly first. You get over the top, or at least tested the top, right? Couldn't stay over it. Retest regen is over here. This one held the first time around. Now it's coming down to try it again. Ways to go to get there, but that's what it's doing. It still looks good. And let's go to uranium. Now this one's kind of a special case. Sometimes these things will end up with a situation where they don't show, quote unquote, the true trend. This is still showing sideways because it broke to the sideways there, broke this swing point low, and it hasn't gotten back over the top, so it really hasn't, quote unquote, turned bullish again. But if you look at the chart, right, this is a fairly bullish chart still, so you're really sideways out here already on the monthly, but I would say a very bullish sideways, let's put it that way. If we look over here, you get a retest regen off of this guy, and it just got under it. That tells you, just like on CCJ, that more than likely you're going sideways. So you get the picture here, and the point of doing that was to show you the picture, and that is that most stocks are trying to do sideways. Most stocks are still bullish over here on the long term. Usually, you know, that's hesitation before some sort of a continuation type move. On the uranium itself, you actually have still holding a sideways trend on the intermediate term time frame. So in here it's sideways, still bullish out here, bearish here, same picture. They're all doing the same thing. What you need is you need some contracts to actually close, and you need some demand to come in and start pushing price back up. And until that happens, these markets are going to just struggle on a sideways type move and fading back in on their long terms. At some point, I suspect that's what's going to happen. You're going to see contracts fulfill. We saw one or two here at the end of the year, but nothing to stampede people in yet. When it happens, right, it will be a stampede probably. That's where uranium is. I'm still long. I'm still thinking this market's going to do what I want it to do. It's a patience game. It's a tough one, but that's where we're at. That's where we're going to start the year. I've actually positioned myself to buy more if I need to, and we'll see. You know, as long as it, you know, and matter of fact, let's just talk about that for just a quick second. So if I go back here to the UUN, you know, where would I buy this thing? Well, if this thing breaks down, I'm not going to buy the breakdown. I'm going to want it to retest regen, get back over it, and hold it. Then I would want to buy more. I don't want to buy the breakdown, right? That's kind of a loser's game. You want it to tell you. You want the market to tell you it's time. The way it would tell me it's time is if it broke down below this low, that would be a bearish retest regen. I would want to close up here around the 25 mark to tell me that low is done again. And then I'd be more interested in buying it. All right, have a great one. Take care. If you want to help me out, give me a few likes and subscribe, and you know, hit the alert button so that you get alerts when I publish these. Take care.